So with gold at $1,800, like you're just mentioning, you've been an outspoken contrarian and right and for a long time. But I'm wondering now that all of what you've been preaching for the last decade and probably longer is coming to fruition, and gold is $1,850 or whatever it is today. Who's contrarian now? Is it you? And I'm wondering, is it not somewhat contrarian and therefore bullish in your core philosophy to be long U.S. equities or long U.S. real estate?
Well, first of all, gold isn't cheap anymore. That's too bad for the latecomers to the game. But it's going higher. Don't worry about there being a bubble in gold right now. There's not a bubble in gold. It's just coming to the public's attention. But there's no bubble in it by any means. I think that in terms of today's dollars, it's not at all unrealistic to see gold at $3,000, $4,000, $5,000 an ounce. When will the top in gold come? I expect when Newspeak or Slime magazines, should they exist that far in the future, several years more even, when they run a picture of a golden bull tearing apart the New York Stock Exchange, that would be the key to sell gold and buy stocks. Now, why don't I buy stocks now? Because they're not cheap now. People forget that historically, market bottoms have occurred when the market as a whole yields 6 to 8% in dividends. I think by the time the market bottoms this time, it could be yielding more than that, and that's after they cut dividends. So I have no interest in stocks. I'm getting kind of interested in American real estate. If I owned Vancouver real estate, incidentally, I'd hit the bid tomorrow morning. This is one of the last remaining bubbles in the world in terms of real estate. But I'm looking to buy single-family houses right now, actually in Las Vegas. Maybe a little bit early, but I'm getting interested. But generally, I'm not interested in real estate. Bonds, forget about it. Incidentally, that's one of the best one-way speculations. You can make a fortune being short bonds at this point. So just a few thoughts.
So you said a minute ago, and everybody kind of says this, that it's when the gold bull's on the front page of the New York Times. Obviously, we're at the top of the market, and I've got some friends around Vancouver. Obviously, I know you're a junior resource sector investor and a junior gold stocks investor, particularly. And in the spring, Sean Ryan, the famous Yukon prospector, was on the front page of the New York Times. And I remember saying to a buddy of mine, I mean, maybe this is the top. And since then, junior securities haven't done very well. And are you sure right now isn't that top?
Yeah, I'm pretty sure it's not the top, actually. Gold is over 1,800. It's been driven here by fear and by prudence. And that's why you buy gold. And you don't buy mining stocks because of prudence or because of fear. So mining stocks, as we speak, are very, very cheap relative to gold. The reason I like them right now, though, is because with these trillions of currency units that are being created all over the world, there will be other bubbles inflated. A bubble eventually will occur in gold. Not yet, but it will occur in gold. And it's likely to occur in mining stocks, especially these junior mining stocks are likely to be a bubble in the future. They'll catch up and exceed gold as the public piles into them looking for some way to save their capital. So, but don't refer to them as an investment. Refer to them as a speculation. An investment is buying into a business that produces and pays dividends and is predictable. These things are a crapshoot, actually, as a group.
Just to go back in time a little bit, something that I'm very curious about is you've had a long career as a well-known metals investor and advocate, and I'm just curious about the moment in your life and career when you decided that this was the place to be a long time ago, and sort of what was happening around you and why you decided to focus here. Was it because it was a market you saw could be there's less expertise there and there were more ways that you could take advantage of it? Why did you what was that moment for you?
Well, I'll tell you how I got into this is that when I was a kid, just a little kid, the third thing that I wanted to be when I grew up was a geologist. So I've always had an interest in science, and certainly that area of science, among others. And then later on, I got interested in money, economics, so forth, and I started learning about gold, the history of money and economic theory and so forth, and I put them together. Geology plus money leads you to mining stocks. So that was the natural evolution.
Can you tell me a little bit about your early career? And I understand you're a broker for some time, and I'm just curious how you became a newsletter writer, which is a pretty unconventional business.
Well, I'd been studying economics and money and so forth for a while, and in 1970, or perhaps it was 71, I read Harry Brown's book, How to Profit from the Coming Devaluation. And in that book, Harry, who we later became very good friends, predicted what was going to happen to gold, to silver, to the dollar, and he predicted not only what was going to happen, but he predicted the right reasons for it happening. I read that book in 1971, started acting on it immediately, not with much money at that time because I didn't have much, but I said to myself, damn, I could have written that book. And it turned out that I did, when in 1978, I wrote Crisis Investing, which was kind of the same book for a slightly different era.
Were you a broker at that time? Like what?
Yeah, I was. I worked for several years as a stockbroker, and actually I was a broker when the market hit a secondary bottom in the summer of 1976. You'll recall that after gold broke free from the dollar in 1971, it went from $35 an ounce to, at the end of 74, $200 an ounce. Then it lost 50% of its value by the summer of 1976. So I was a broker selling gold stocks to people, dead flat at the bottom. Back in the days when, believe it or not, this is true, short life, high cost South African mines were yielding 50, 60, 70% in current dividends at the bottom of the market. Just shows how cheap things can get from time to time.
Can you tell me a little bit about the education of Doug Casey? Like I understand that you went to Georgetown, but I'm curious about what advice you'd give to young people in considering education, post-secondary education, and what was it? Was it mentors? Was it peers? What shaped you, and what advice do you have for young people now?
Well, yes, I went to Georgetown, but I consider that to this day a misallocation of my time and my parents' money, and certainly today. I mean, back then, not everybody went to college, and it was much less expensive in relative terms than it is today. But today, it's a mistake to go to college or beyond, unless you want to do something that requires a license that lawyering, doctoring, things like that, or where it's good to have the formal discipline, science or engineering. Okay, I can see that. But most people don't do that in college. They take ridiculous things like sociology or psychology or political science, and these things are not just worthless, but they're worse than worthless. People get out of school having learned nothing of value, cluttered their minds up with all kinds of false concepts, and carrying a lot of debt. So if I was going to advise somebody in getting out of high school right now, I would say take the money and the time that you would spend going to college, which is what everybody else is doing. It's usually a mistake to do what everybody else is doing, and figure out what you should really do. Perhaps it would be to travel around the world with a backpack for a year looking for opportunities to start with. I can think of lots of things, but not go to college taking liberal arts.